Hello YouTube and welcome back to another 50min market update. I'm Stefan, a full-time day trader and founder of 50min. Today I'm going to explain my further plan for BTC, Ethereum and the altcoins after we hit last week's perfect plan at BTC. If you don't want to miss updates like this, don't forget to leave a like and subscribe to the channel. Now let's jump into the charts and let's see what I expect for next week. Last week I talked about that we are gaining more bearish momentum because we are now in the bearish scenario that I'm talking about since months now. I talked about last week that we are having two important liquidations clusters. We have the long liquidation cluster in the 89k area and the short liquidation cluster into the 107.5k area. I talked about that if we hit one cluster, market maker will definitely go into the another direction to trigger more retail investors. As we can see here, we saw a pump into the 107.5k at the beginning of the week because there was rumors of the government shutdown and in general also with the tariff premium from President Trump that pushed the markets higher on Monday before we dumped again. As we can see here now, we saw directly the pump on Monday pumping into my target of the 107.5k region. I mean, if we can look here now, we touched it perfectly before we dumped again, so it's a perfect plan. Got executed. So we pumped into 107.5k, and after this one, as we talked last week, if we hit the shorts as before the long liquidations, we're going then to drop even further. So as we can see here now, we reached the 107.5k, and after this one we nuked lower into the 98k cluster as I described last week. What is very important to notice is that we only saw a small bounce into the 89k cluster. So this is very important, and we will now talk about what I expect for BTC next and why we crashed below this level. So let's start with a new outlook. As you can see here in the general liquidation heat map that I'm talked about last week, we hit the 89k cluster in this area as already described before we hit the cluster in the 105k level. So what is now really important is that more longs are going into the markets again. So we don't have currently the real pain into the markets. So where real panic is on the markets and where everyone is afraid to buy. We can see here that we are gaining more and more tighter lines. Since the drop from the 89k into the 59k area, the bulks are getting tighter and tighter. So that means more longs are getting into markets and not spot primarily. This is primarily more futures driven because we can see that last week when we didn't hit the 89k cluster before, this cluster was, it was less interest than the 89k area. And after we dropped now below the 89k area, it's getting tighter and tighter. So the current bounce, the current bottom that we are building here is primarily more futures driven, and this is not really good because the bottoms should always be spot driven and not really futures, because futures are not that sustainable like spot. Futures always has a liquidation price and market makers love to hit those liquidations. And as you can see here now, this was also very important to notice, is that the bulks are getting tighter directly below our price levels. So market participants are going with a high leverage into the markets to gain from the bottom and another pump. This is primarily because more influencers are going in and saying, yeah, we need to buy now, the 90k area must cluster, there's the CME gap, etc., etc. And this is pushing more high leveraged future traders into the markets. If we're going on a higher time frame chart, we can see the 90k cluster that is building now up. I can also draw it here in, is high, but what is also very important to notice is that the 107.5k, the 117 level is gaining high volume. That means that also much shorts going into the markets and making the regions above us very juicy. If we are finding here bottom, I can well imagine that we are bouncing back into those levels, but more on that later. Overall, so for me, the nearest liquidation cluster is now again below us into the 90k area. If we're going now into the charts again, we're seeing a very interesting structure. So to come back to my game plan, I described a few months ago that if we are dropping below the 110k region sustainable, I want to see first bounce into the 98k cluster. And if we see more bearish pressure, I want to see at least in the 92 to 90k area a bounce. So as we can see here, the 89k cluster wasn't really a big bounce opportunity. So we only saw the BTC once we hit this level at 2.5% bounce before we dropped lower again. So for me, the plan is still the same. I want to see in the 92 to 90K area at least a bounce back into the 98K cluster. So this is very important because, as we can see here, we have liquidations, we have the CME gap, and we have in general a very big, strong support point. So this level, in my opinion, must hold to gain another bullish wave into the crypto markets. If we are dropping below again, we may have a bigger problem, but for this, I only make a video when the time arrives, because this scenario is at the moment not in my interest. In my interest is currently the scenario that we are hitting the 90K cluster and then we are going higher again. First target will be the 89K. If we can overcome it, another rise into 107.5K is possible. But for this, we need to wash out those long liquidations that are pushing here again. So when we are seeing this dump is really, it's hard to say, because the stock markets saw also a crash last week, but we saw yesterday a dip buying that pushed the index again at those same levels at the beginning of the week. So, and this don't happen at BTC, so we need to watch what happens next week. We also have the important Nvidia earnings. This will also be very important for the general tech sector. So if we see here bearish EPS, so a bearish Q3 data, I can well imagine that we are seeing here then the bounce, and after this one it will be device how the markets will react. If it's a local top for Nvidia, how is BTC developing? And above all, what is very important also is that the rate cut odds for December. So as you can see here, the whole October we saw a 100% rate cut odds in December. So, and after Powell's speech at the FOMC meeting at the end of October, we saw a huge decrease. And after the government shutdown opened, the reopen from the government, we saw another drop, because we're seeing in the next few weeks a huge wave of macro data that may change the view from the Fed. And so this is also a reason what we need to watch if we are seeing a higher rate cut odds or not, because if not, this would also lead to a drain liquidity flow into the markets, because we wouldn't see another rate cut and the Fed would be more hawkish again, and this is in general not really bullish for risk assets. So I think, so for me, next week will be very device, not only for BTC, in general for the crypto markets. If we can see another bounce into the if we're seeing another bounce and another bullish wave, or we're seeing a larger downtrend from BTC, it's possible. If the Nvidia data is bad, we are seeing a local top with a hawkish Fed, so why should BTC rise? This is very important to understand, that the markets now won't outperform the stock markets. We can also see here in the general that we're still holding the $6,710 region, that what is very important for the SPX and in general for the CTA algos, because when we are dropping below, we are gaining more selling pressure. As you can see here, we saw it twice. Once we are losing this level, we already dropped in a few minutes 1.3%, or as yesterday 1.1%. So, and it's very also important that if the stock markets seeing a local top, Bitcoin won't outperform it at the moment, because we're on the Bitcoin and in general the crypto market is now the worst performer from them in the last few weeks. And why should BTC now outperform the markets if the stock market sees a local top? This is very important to understand. So for me, I also have now opened BTC as my limit order that got triggered. 35% at 70.8K and 40% at 69K. So, and I will also leave the rest 25% open at 92K. So for me, this is a very good spot. But if the stock market sees a local top with a bad Nvidia data, with a hawkish Fed, I will also close this position, because it's possible that we are going lower. Because if the stock market sees a local top, Bitcoin won't outperform it. I also opened with limit orders, Solana long positions. So here, the first 35% got hit. The rest, 65%, is still open. But as already said, if we see a local top at if we see a local top at the stock markets, I will also close the Solana position, because we won't see outperformance. This is very, very important to understand. So if we are seeing the 90K area, we need to watch if it's only because of liquidation hunt from the market makers or because the stock market sees a local top because of the reason of a hawkish Fed and a bad Nvidia data. This is very, very important to understand. If we're dropping into the 90K area, but the Nvidia data beats their earnings and the hawkish Fed goes a step back, seeing good labor market data to cut also in December, this is still would match with my plan, dropping into 90K cluster, hitting the long liquidations. After this one, we're seeing a bounce. But this is also only possible if the macroeconomic and the stock market also rise. If the stock market sees a top and we are in the 90K area, it's possible that we are dropping further down below and seeing the next few weeks or even months more bearish momentum. This is very, very important. So don't long blindly altcoins. Watch for BTC. Only when BTC really creates a bottom, I will go more into the altcoins. Yesterday, I longed for an example HBAR, Sonic and AKA. So, and after we didn't saw a pump from BTC, so a local top, so a local bottom, those altcoins drop again even further. So if BTC don't find a bottom, altcoins won't find it also. Very important, altcoins won't outperform BTC that huge. And I already talked about this last week. We had, for an example, near USDT, I talked about that we may see more bullish momentum. Yeah, we didn't saw bullish momentum from the top. NEO nuked 27%. The same with Filecoin. We saw here, we didn't overcome the high time frame region, so we saw from the top into the bottom minus 51%. The same for Render USDT. We didn't overcome the high time frame region, and after this one we dropped another minus 30%. So, and this is very, very important that we're still in the momentum that altcoins, if they can outperform, this is only a matter of time when they're reducing their moves again. And this momentum will last until BTC will find a bottom. So if we see in the 90K cluster, I will definitely wait for a clear trigger, for a clear break of structure, breaking above the 92K area. And if we're seeing here overcome again, I will watch out for more longs at altcoins. But until then, my focus is still more on the short side. This is very important to note because, as already said, the next target will be definitely below us. This cluster is too big for not pushing them out of the markets. What is also important is that, so just make it clear what's my plan for BTC. My bearish scenario would be again that we are hunting those liquidations, but it's also possible that we see another pump into 98K, and after this one we are dropping further down. A pump above the 89K, so we would target the 102K area, is for me at the moment not really relevant because we didn't see really bullish power, and as we can see here now, the 25% order book spot is still not really bullish. So this means that spot market makers don't place many bids below us. So if we see even a bounce into the 89K, this will not be sustainable because we're not seeing many spot bids below us that is supporting the price. So for me, 89K, and after this one, the 90K. The end cluster will be definitely the long liquidations in the 90K area. So, and now let's take a look at Ethereum. Ethereum is interestingly outperforming BTC. We are seeing that we are holding the 3K level. As already described in my game plan a few months ago, the bearish scenario would lead for Ethereum that we are dropping into the 3K area. To be honest, I mean, the scenario is now here. We saw the bearish scenario at BTC, Ethereum now at 3K, but it's still very interesting that we're holding this level while we have so much long liquidations below us. As already described last week, we have a huge long liquidation cluster into the $2,200 level, which would get hit if we are dropping further. So for me, for Ethereum, if we can hold the 3K area, it's really, really interesting because it would lead already to an outperformance while BTC is still forming a bottom. So for Ethereum, my plan is if we see from BTC a drop into the 90K area while Ethereum is holding the 3K area, it would be definitely worth a long here with the target of definitely higher and higher. So if we can hold the 3K area while BTC is dropping into the 90K area, I will open a long if we can hold the 3K area. Because if we can't hold the 3K area and we're dropping below, the next target will be the long liquidation cluster into the $2,200 region. It's very, very important. And if Ethereum drops, this would lead also to a general sell-off into the altcoin sector. So for me, my plan is for Ethereum still more coupled on BTC. But if we can see outperformance from Ethereum, I will definitely take a long at it. Overall, the altcoins saw exactly that what I expected. Last week, I said that we are now pushing into the local resistance, and it's now important if we're seeing another sell-off or not. As we can see here now, last week, during the Monday push, we saw also at the altcoins a small outperformance. We pumped above the local resistance, but we didn't hold it sustainable, so another drop occurred, and we dropped again below the local resistance. After the local resistance top, we nuked another 10% at the altcoins, at the total free chart. So what's here really interesting is that the altcoins are holding pretty well compared to BTC drops. This is because Ethereum holding the 3K area. This is very important because if BTC don't hold the 3K area, it's still possible that we're filling the 100% wick in the $760 billion region. So this is very important because if we compare it with Ethereum, we can see that we are holding nearly the same structure like Ethereum. So if Ethereum nukes below the 3K area, we are also going lower into the 100% wick fill area. So the altcoins are primarily holding that well because Ethereum holding the 3K area. So if you see BTC is forming a bottom, first take a look at Ethereum holding. Are we holding the 3K area or not? If yes, take a look at the total free chart. Are we holding the 50% wick fill area? Yes or no? If yes, altcoins can lead to another push because of the Ethereum strength and in general the strength of the altcoins. If Bitcoin is founding a bottom and Ethereum is below the 3K area and also the altcoins are below the 50% wick fill area, it's possible that we are entering there another bearish scenario and dropping from the altcoins from the total free chart into the 100% wick fill area and at Ethereum into the $2,200 region. So it's really important now. We are now in a risk-off mode. That's really, really important. And risk-off in the crypto markets means that altcoins are having the last place into the markets, into the capital flow, first capitals. The first capital flow will go into BTC, then Ethereum, then high coins, then mid coins, and then low caps. It's really important. So if you want to invest now into altcoins, watch for BTC, watch for Ethereum before, and also watch for the total free chart before you're investing into those coins. It's really, really important because such bottom catches at altcoins could lead only to another sell-off if BTC don't find his bottom. This is really, really, really important. Overall, the BTC dominance, I mean, it's also here very interesting that we are seeing here in the lower time frame, a smaller bearish structure because we can see here we're dropping below the support point, then we're going sideways before we're dropping again. Now it leads to another sell-off if we can't overcome, for example, the 59.7 region again, we're seeing another leg down into the 58%. So this overall looks bullish for Ethereum. But as we said, market makers won't let us this easy. So wait for a BTC bottom before going into altcoins. I say it very often because it's very, very important. It's really, really important to understand. So here it will be interesting if we can also find here in the 59% area, if we can find here a bottom again or bouncing here above higher, because if we're seeing more higher BTC dominance, it would directly show us that more capital is flowing into BTC. And what is also very important to understand is while people are now asking me, yeah, BTC dominance is flowing down, Ethereum dominance is pushing a little bit higher. So overall, it would lead maybe to an altcoin season. So overall, we are not at the beginning of an altcoin season. And what is also very important to notice is that the USD dominance, so the dominance of the general crypto market, so of the general crypto market capitalization from the markets, we can see here the USDC dominance. So overall now 2.4% of the general market capital is now laying in stablecoins. I mean, this is a very huge amount of money. We can see here the liquidation wick from the liquidation event a few weeks ago. And we can see this is fully filled now. We are now even above this region. And this is also in the USDT dominance. So we can see here that there was the liquidation wick and we dropped even higher. So overall, many market is now laying in the sidelines. So many market participants are now waiting for the moment to going again to the markets. And I mean, it's very interesting. Ethereum at 3K, BTC near the 90K. It will be now very important. Are those supports holding or not? If not, we may can see the USDC and USDT dominance falling again and the markets pushing more shorts into the markets, or we are holding those support points and the USDT and USDC dominance also falling because they're pushing capital again into the markets to gain higher prices. So overall, the markets is in a very device moment. This is a very important and a very interesting time that we are here. Very interesting will be also because next week's Nvidia data, also the FOMC meeting, and above all because we are now in the legendary Q4 where we should see another rally as the last few years before us. So if we see another Q4 rally will be device if we can hold the 3K at Ethereum, if we can hold the 90K at BTC, and in general, if the stock market sees a local top or not. The next few weeks will be very device, so be careful at which levels will we see if BTC holding, if Ethereum holding, if the total free will hold. This will device for the next few weeks and even months. I'm really hyped for the coming time, and I will keep you updated at 50 min as always. That's it for today's market update. Next week will be very important with the Nvidia earnings data and the current macro situation. If you found this helpful, make sure to leave a like and subscribe to the channel. See you next week.